News follows the price, not the other way around. They get a great return on the money invested in the business. Okay, I got lucky.
Okay, now what happens? What happens next?
All right, guys, Meta, it's back, baby. It's at $220 a share. It got as low as 88 bucks. Guys, I got super lucky. It's only the second time in history I've ever bought a stock that potentially could be the all-time low. I bought Southwest at 25 bucks and literally went straight up from there. It wasn't the all-time low, but right when I bought it, went straight up. Meta, I had bought it on November 4th, 2021 at 88 bucks. Now that's because I had a put that got exercised at that point and I got it for 88 bucks. Okay, I got lucky. Now, we look at Meta and we think a potential value play. How much of a value play? That's what we're here to discuss. So if you're new to the channel, our goal is to look at a company, look at it from a long-term horizon. Is there a lot of negative news on Meta? Sure. But lately the news has been great. Why? Because the price went up. Guys, I want everybody to remember, news follows the price, not the other way around. When the stock plummets, the news focuses on why it plummeted. When the stock goes up, news focuses on why it goes up, right? Literally at 88 bucks a share, Zuckerberg was the worst CEO in the world. Now, Redemption City.
And Jim Cramer was literally on TV, almost in tears, apologizing to his audience, saying, I'm sorry, I shouldn't have led you down this road. Now he's saying it's the greatest play of all time.
He's an idiot.
That was like 4 months ago.
He is an idiot.
That's correct.
So our goal here is now to analyze the company, take a look at it, and let's do some high-level looks right now. So first off, $585 billion market cap. This means if you bought all the shares in the company, you'd spend $585 billion. Here's the enterprise value. This is essentially, the difference here is essentially the debt. Very low amount. Only $19 billion on a company that does $117 billion in revenue in the last 12 months and $23 billion in profit. Now, the PE looks a little rich, right? But look at this gross margin, Mo. 78%. They have, what, 3.5 billion active users amongst Instagram, WhatsApp, Facebook.
Yeah, it's amazing.
It's almost half the world. By the way, a shout out to India. Congratulations on taking over China as the most populated country on Friday. Did you hear that?
Nope.
That's what happened.
So that's awesome.
They said Friday. Obviously, it's all estimations, but it happened. But look at this, Mo. 16% return on invested capital.
Huge.
Guys, that's a good return on invested capital. What that means is they get a great return on the money invested in the business. As they find more opportunities to invest, they're going to get a better return without investing as much money. So if they want to increase their profit by $16 billion, theoretically, they need to invest $100 billion. But if a company has a 10% return on invested capital and they want to increase their profit by $16 billion, they've got to invest 10% here. It's $160 billion. So Facebook will have $60 billion extra dollars in their pocket to buy back shares, pay dividends, pay down debt, etc. This is a sign of a moat. Higher return on invested capital means they don't have to invest as much money to protect their business, right? And that's a moat kind of status. But again, it's all a qualitative aspect. Even though there's a number here, it's all about looking at it and saying, I mean, because look at Apple. Apple's 5-year return on invested capital is like 37%. Guys, they can't invest $100 billion every year and increase their profit by $37 billion on that. So, but it just shows how great the moat is for Apple and the extra cash they will have to be able to buy back shares when they want to. Right? All right, what other things stand out for you, Mo, on the 8 pillars?
8 pillars, I mean, this thing is lighting up green except for the cash flow part. So I looked at the cash flow part, it is coming back to those, so it had a big explosion in cash flow in 2021. It jumped to 39 billion, and now it's coming back to kind of the numbers that it was at before. Now, the one thing that I saw in the income statement, look at this jump. From 2020, let's just go from 17. 40 billion, 55 billion, 70 billion, 85, then 118 and back to 116. That's big jumps.
Well, remember, during COVID,
so
advertising online was huge.
Okay, now what happens? What happens next?
Yeah, so the free cash was a little bit lower than the PE, but it's not far off.
That doesn't worry me.
Right, so, okay. So guys, before we do our stock analyzer tool, which is the number one part of our site, I want you to remember all of this is available on a special, $7 for 7 days. Our price is going up very soon to $39 a month. So sign up now. Every month from here, we'll go up $1. So the sooner you sign up, you lock in that rate in that category forever. So sign up, everythingmoney.com, $7 for 7 days, $1 per day. If I asked to borrow $1 from you every single day, you would never ask for it back. This changes the way you look at money. So check that out, everythingmoney.com. All right, guys, so let's look at the analyst estimates for Meta. So they still have growth here for the next few years, a pretty good, decent growth until a few years from now, but getting up to $13 a share in profit, okay? All right, not bad. Again, take it with a grain of salt because analysts have the same bias as everybody else does, maybe even more because they have career risk. They still have to be within everybody's range. Now, let's look at revenue. again, revenue is growing, and with the high return on invested capital, the profit can grow a lot faster than the revenue can grow, which is great, okay? But they're still looking at high single digits overall revenue growth the next 5 years, right? All right, now, before we go to Stock Analyzer tool, and remember, we're gonna use the Stock Analyzer tool to determine the value of the business, not including the balance sheet. I'm gonna do a 20-year analysis. Mo will do a 10-year analysis. But before we do that, Mo, why don't you go over a couple of bull and a couple of bear points on Meta?
Okay, so for the bulls, they are shifting their capital expenditures. They're going to be doing $30 to $33 billion over a period of time. But the big thing about it, they're going to be focusing it on the family of apps, meaning Facebook, WhatsApp, Instagram, etc. So the price per ad was decreased 16% year over year, but they had an 18% increase on spending on the family of apps side.
So what does that mean?
So they're decreasing their
got it.
But they're spending it
So
towards, they're just
got it.
going right at those specific groups.
Oh, wow, that's great.
That's really great.
Okay.
So average revenue per user in the United States is about $60
per user.
per user. And around the rest of the world, it's $4.
Yeah.
So imagine the growth potential that they have.
And again, China, India, Africa, I mean, these are emerging markets.
I just think of all these places that don't even have internet yet.
Yeah.
Don't even have cell phones yet. Don't even maybe know what Facebook is.
Yeah,
what Instagram is.
And the revenue per user internationally is like up 27% and 18% different markets. So guys, there's a lot of revenue potential as long as Facebook could keep its hold on being the #1 social media network.
So I don't see that changing. But I also didn't see Facebook coming and taking out MySpace at the time.
I remember saying back in the day, like, oh, Facebook's not going to beat MySpace.
Yeah.
MySpace sold for $550 million, and then later on sold for $35 million to Justin Timberlake and a group of investors.
Yeah. Now, the interesting thing is when Instagram came along, they grabbed them. When WhatsApp came along, not that it's really social media, they grabbed them. I'm sure.
Yeah, but the great thing about WhatsApp is, for those of you in the US, I don't know how many of you use WhatsApp. Literally, we have houses in international countries. We go internationally. Literally, they'll say to you, what's your WhatsApp?
Yeah.
Just give me your WhatsApp. Like, that's all it is. That's the way, we talk with one friend, our friend Matt in Rochester, because he has a Droid, so we don't want to have green text all the time. We do WhatsApp.
Yeah.
But it's a great service. We love it.
It's fast.
It's better than iMessage.
In some ways, yeah.
In all ways.
You can't edit messages.
In what?
In WhatsApp?
You can delete messages.
Can't edit.
All right, so what are some bear arguments for Meta?
So some bear cases. Research and development has increased 43%. Now, it depends where they're spending it, right? I don't necessarily think it's 100% a bear case.
Guys, remember, companies investing themselves in research and development can get crazy, but I think you'd rather have them spending money on R&D versus not, right? And it has increased a lot. The metaverse has been a big spend for them.
Now, the Reality Labs thing, the losses have increased 35%. But at the same point, they can afford to do this, in my opinion.
Yeah.
I mean, this is a cash burn, sure, but it's a cash burn that it's not a small company that's going at this, and if it doesn't work, they're just screwed.
Yeah.
Right?
Yeah. So it's another bear argument.
So CapEx per share increased 86%.
Yeah.
That's big.
Yeah, and I also...
Again, I don't know. Nothing of these bears is screaming, you better be careful with this.
Yeah, so like a bear argument to me that would concern me is user use is down, user growth is negative. User use is negative, and we don't see a way of turning that around. That would be something that it wouldn't even turn me off. It would just say, okay, I just need to increase my margin of safety on this company.
Right. Or users have deleted their Facebook accounts and gone to whatever the next big thing is. And it's like proven that they've gone to this new platform. That would scare me a little bit. But we're not seeing that.
Yeah, and even with Facebook, and there's still a lot of moms out there and dads out there, and you remember my, I'm not going to single them out, but the math question. Guys, on Facebook, they'll be like, hey, do this. So this is the math problem, and I'm going to get into this right now because I want people to see this. This was the math problem. It was 8 divided by 2, 4 minus 2. So of course, the question is, what's the right answer here? And of course, everybody in the world was putting down 2. And one guy I know said,
how do you get the 2?
Because you go 4 minus 2 is 2.
Right.
Times 2 is 4.
Okay,
8 divided by 4 is 2.
Gotcha.
Here's the right way of doing it.
Yeah, that's not
8
even I
you do parentheses first, right? So multiplied by. Okay. Then once it's like this, you do left to right. 8 divided by 2 is what? 4 times 2 equals 8. That's the right answer. So I got sucked into this because somebody insulted under 45-year-olds goes, if you're under 45, the answer is 8. But if you're over 45, the answer is 2. And I wrote, if you understand math, the answer is 8. If you don't understand math, the answer is 2. And then I wrote, I can't believe I even responded to this. And he still insisted he was right. And then I sent him then I did it. I said to him, I went on the internet and found one of those math things.
Yeah.
I just typed it in and it said, answer is 8. And I was like, he goes, well, that's not how we were taught. I'm like, guarantee that's how you were taught. So
you just forgot.
That's Facebook for you. However, with Instagram, a lot younger crowd. And guys, remember, the people who use it now, as they get older, will continue to use it and will continue to use it for acquisitions.
And one more thing, they have not even monetized WhatsApp yet. There's rumors that they're going to monetize it. I have no idea how that would happen. Maybe you have to pay to use WhatsApp, or there's some type of ad stuff that you have to go through when you open the app.
I think when they first started, their talk was like $1 per user per year. Because there's like freaking, how many users of WhatsApp are there? Like 1.5 billion?
It's ridiculous, yeah.
Something like that. So our next step, guys, is to use the stock analyzer tool, like I said. So I'm going to do a 10-year analysis. Mo's going to other way around.
2.44 billion.
2.44 billion users worldwide. And guess what, guys? It'll only get higher as more and more people become technologically savvy. Guys, just think about China and India, how much they've grown, how much more potential they have. And we haven't even tapped Africa yet.
Right.
Africa will be the next frontier of major growth.
Right.
Unless Kenya, of course, does stop using the US dollar and screws us over.
It's true. They have a chief economist of the world is running their country.
So I'm going to do a 20-year analysis. Mo's going to do 10. And the reason being is I do believe Facebook will be around 10 or 20 years from now. I believe they'll be making more money. The question is, can we buy it at a price that makes sense? So just hang on one second. All right, we're back, guys. Mo, you did 10-year now, I did 20. What is your first revenue growth numbers?
So I did 4, 8, and 12.
Okay, so he did that for 10 years.
Yep.
I did 4, 7, and 10 for 20 years. Now I want to keep in mind, what does that mean for 20 years from now? 1.1 to the power of 20 times last year's revenue of 116 billion takes them to 780 billion dollars. Guys, yes, it's a lot of money, it'd be more than anybody today, but it's 20 years from now.
I think it's pretty reasonable.
We just did a video on Amazon where we got my high range. I sat there and did it because people were saying to me, oh, they can grow 12% a year for the next. It would take them to $5 trillion in 20 years. That's a lot different than 780 billion.
Right.
So I'm good with that. It'll take a lot of effort to get there, but I'm good with that. Mo, on profit margin.
So I did 25, 30, and 35.
I think you're right. So I wanted to be really conservative. I went 20.
Okay.
27 and 34.
Okay.
I'm gonna say, hey, listen, they're gonna keep putting money into this crap that's not working for the next 20 years. They're gonna always have some stupid project that doesn't work.
Yeah.
I'm fine with that. Free cash flow margin.
I did the same thing, 20, 30, and 35.
25, 30, and 35.
I'm sorry, 25, 30, and 35.
I did 20, 27, 34, matched my profit margin.
Yours. For PE and price to free cash flow, 16, 18, and 20.
I did 15, 17, and 19.
Okay.
Okay.
And go ahead.
And for desired return?
I did 10, 12, and 14.
I did 9, 11 and a half, and 14. Now, here's why I went with 9. Guys, this is absurd.
Yeah, it is.
This is absurd.
Yeah.
High side, I need my margin of safety. The higher I went, the more margin of safety. I thought to myself, okay, let's say they do this. I need 14% return.
You can even argue go lower than 9.
Correct.
Okay.
What'd you get, Mo, for your values?
Let's see here. Wow. 182 on the low end, 273 in the middle, about 400 on the high end. Watch list, $175.
160 on the low, 245 middle, 350 high. Guys, again, we do this video, we come up with different values, but the point here is this seems, and by the way, it's on my watch list at 160. I actually think the range could be wider than this, but it all just depends on what you're doing. But the bottom line is, this tells me it's undervalued. Should I be buying shares today? Maybe so. That's for you to determine. So guys, thank you very much. Check out everythingmoney.com. $7, 7 days. Please sign up. Take care.